Hello everyone, welcome to the trade breakdown on EU. This time I'm going to start off with the weekly time frame, and we're going to see what has happened here on the weekly time frame throughout the past few weeks, and what was my thought process on the weekly time frame, right? And how did this higher time frame thought process actually led me to taking a trade idea and generating a trade idea in the lower time frames, right? We're going to see that here. Now, if you've been in CPI since the first level, and you remember the first few trade breakdowns that I made on EU, then you'd remember that I'd be calling this range high as my long-term drawn liquidity since the last 2 to 3 months, right? And you can see that throughout the last few months, we've been consistently moving higher towards the higher time frame drawn liquidity that I had pointed out, and I had my drawn liquidity correct for the past 2 months, right? Which led me to taking some really good trades on lower time frame, and you all saw those executions, right? Now, if you've been diligently following CPI and noticing these things inside these breakdowns, then you would have also had a correct drawn liquidity for the past 2 months. Because in these trade breakdowns, you can see that I sometimes also give my long-term drawn liquidity and I point towards my long-term drawn liquidity. And if you are a smart student, then you would notice these things and you can potentially exploit these parts of these breakdowns. That's why I say that these trade breakdowns are really important, because not only they show you how you can apply this knowledge in the live market, but along with that, it also I have also given you some hints towards the higher time frame drawn liquidity and these breakdowns. That's why you must watch them at the correct time, right? And you shouldn't be late in watching them, otherwise you're gonna miss the higher time frame drawn liquidity. Because if you watch it later, then it's not going to benefit you that much. And one another thing of watching it early, one another benefit of watching it early is that you can then go on to your charts and you're gonna see the latest price action, and you can easily reverse engineer and break down that price action, as compared to if you watch it late, a few months later, and then uh, you're gonna have to like go back to the past data, and that would be comparatively really hard for you, right? Now, determining higher time frame drawn liquidity is one of the most important and significant part of our analysis, right? Without drawn liquidity and without knowing where is our higher time frame drawn liquidity, we are blind on the lower time frames, right? Without it, we wouldn't know what's going on and where price actually wants to go, and we wouldn't have a proper framework to work with, right? That's why, if you've noticed, I give so much importance to our higher time frame thought process, because it's one of the most, if not the most important, significant aspect of our analysis and trading as a whole. Now, if you've seen my execution and trade breakdowns, then you would have seen that it was due to this part, this part of my analysis and trading, that I had a big win streak this past few months, and I did not lose a single trade for weeks, right? You've seen the executions yourself. It was because I always made sure that I have the correct drawn liquidity, right? So I wouldn't be on the wrong side of the markets. Entries and taking entries is the easiest part in trading, right? What most people struggle with is finding and knowing and determining where price could go the next day, the next week, or the next few months, right? And when you finally cracked it and you have an idea about what the markets are gonna do, your perspective and your whole vision on lower time frame would completely change, and it would be better than anyone else's, right? And you'll always end up being on the right side of the markets every single time. And that's the exact reason why I always start my analysis with the higher time frames, and spend most of my analysis on the higher time frame, so that I could actually accurately determine my higher time frame down liquidity, and that way I would always be on the right side, right? Now, if you can see right here, then you can see, first of all, we expanded off of this CRT, right? After that, we reacted to this order block and expanded high, and now we are here, right? If you're wondering how this is an order block, then you can see that this candle filled liquidity by testing this weekly opening gap and then it got broken above and price closed above it, so it became a valid order block for us. We reacted to this order block by testing it, and then we expanded higher. Now you can see that this weekly candle opened here, right? And even this week my drawn liquidity was still higher, which is the weekly range right here. So on the weekly, I have determined my bias to be bullish and my drawn liquidity to be higher. So I know, and I have built a narrative that price is going to be drawn higher. So that way I can make sure that I'm only going to take trades towards the higher time frame drawn liquidity and not take in the counter direction, because that would be lower probability for me. Now I'm going to go down to the daily time frame to see what else we got there and how can I refine this thought process even further. On the daily time frame, you can see we are in a bullish market structure because we've consistently been making higher highs, and we've been breaking above highs while rejecting below lows, and we are respecting the higher time frame key levels, and the order flow is extremely bullish, right? And again, if you remember the breakdowns, I called this exact low right here, and again this low when price took out this candle's low and tested the discount div FVG inside this dealing range. I called this low as well, and since then price has been expanding higher. You can see on the daily we formed this new dealing range higher when price had this expansion swing, and with this expansion swing it took out this CRT low and high, so it became a valid dealing range for us, right? And what happened is that price came down lower and rebalanced the dealing range by testing the discount region of this whole dealing range, and also with that it tested this discount FEG2, which made price expand higher, right? And again this week I've also been expecting higher prices, right? Because we've tested the daily range, we tested the weekly order block. Now the only thing that is left for price is to expand higher. And you can see on Monday price expanded higher initially, right? Price expanded higher. Initially I was expecting Monday to test this order block and then expand higher, but it never did. That and expanded straight away. So I just waited throughout Monday and didn't trade it, right? Because the market did not do what I was looking for, right? And market told me that it want to do something else. So that way I adjusted to the new scenario and the new case for market, and I changed my setup. Instead of forcing that idea, forcing and marrying that bias, I just stayed away and did not force anything at all, right? So you can see then on Tuesday, instead of forcing the same idea in buys, I decided to look for longs right away, because I knew that the market does not want to test the order block, and it wants to immediately straight away go higher towards the higher time from down liquidity, which is the weekly range higher. So on the daily, I determined my drawn liquidity to be higher, and my daily buys was bullish. I determined it to be bullish. I can see through this whole process, I determined my drawn liquidity and buys, right? And now you know that I'm gonna go down to the 4-hour time frame to find a CRT there, to position myself towards the higher time frame drawn liquidity and potentially exploit that CRT on the lower time frame and take an entry there, right? So what happened is on the 4-hour, you can see we opened right here, and first of all I was expecting an expansion from this CRT low. I was looking for this CRT low to be taken, right, during London Open. But you can see that as we got lower and lower, I checked the GU charts and the DXY charts, and I saw that we've got an SMT divergence with both DXY and GU, right? DXY and GU took out the CRT low and tested the FVG, but on EU we did not, which means that EU isn't able to take out that CRT low, right? And it can now expand higher without taking out that CRT, right? And that's why I dumped that trade idea and decided to look for another CRT. And there I chose this candle to be CRT because first of all, it was purchase key time, and second, we have an SMT with DXY and GU, right? So we are destined to go higher, and it might react and expand off of this CRT. And third of all, we had a normal protraction profile on the intraday charts, right? And we had a purge at a key time. So based off of all those factors, I decided to trade this CRT on the lower time frame instead of looking for this CRT low to be taken, right? I did not force that idea because I saw that we have an SMT, right? Informed decisions based off of those factors and aspects. Whatever the market is telling you, if it's telling you it wants to go higher and you're looking for short, then you're going to immediately dump that idea and start looking for longs because the market told you, it showed you signs and footprints that it wants to go higher, right? Understand? So that's why I took this candle SCRT and I then traded it on the 15-minute time frame. Now let's go down to the 15-minute time frame to see what else we got there. So you can see right here, first of all, on the 15-minute, the CRT was paused right here. And after that, I started looking for a model one entry, right? First one I found it here was this entry after this order block was formed. And I took that and it went higher and expanded higher a bit, right? And when it expanded higher, I trailed my stop loss to break even. But then I got stopped out at break even, right? And I got out of the trade. But I still had a conviction in my analysis and thought process. That's why I decided to look for another entry here, which I got here after this model one set of an order block was formed. And I took my entry there with stop loss below the order block's low, and I targeted the range high, right? And I closed my entry right there, right? So even though I got out of the trade with a break even, the first trade, I still look for another entry because I had conviction in my analysis and my thought process and my higher time frame drawn liquidity, because I knew that we have an SMT and price expands higher from SMT. SMT is one of the factor that leads price to expand from a specific place, right? That's why I decided to take another entry here, which was this one, and it paid off and it brought me profits, right? This was the trade breakdown on EU.